So my name is Yuhan Liu, and I'm currently a fourth-year accounting PhD at the University of Mannheim, and I work as a research assistant at the German Business Panel, which is a large-scale survey panel of the TRR 266. And the very unique feature of the German Business Panel is that we are constantly in the field. We are approaching firm decision makers in Germany on a daily basis, which also enables us to track the perceptions and also the satisfaction of the firm decision makers in Germany regarding, for example, economic policy. And the very goal of the German Business Panel project in a whole is that we are trying to have a better understanding about the firm landscape in Germany and to have a better understanding about how do firms make their decisions. So the ESRS is a short term for European Sustainability Reporting Standards, which are a set of the standards under the CSRD, which is a short term for Corporate Social Responsibility Directive. So basically, in short term, CSRD is basically the law that oblige firms to report, but the ESRS is basically a set of the standards that help companies to report so that they could achieve their compliance with the law. And the ESRS came into place in January 2024, and it consists of a set of standards, and currently the ESRS consists of 12 standards, and the first two are general standards regarding the regulation very in general, and there are 5 regulation standards regarding the environmental aspects, so that's the E aspects, and there are also 4 standards regarding the social impact, so that's the S, and also there is also 1 standard regarding the governance. So in total, there are 12 standards. As I have already mentioned, the ESRS came into place in January 2024, and it is going to affect around 15,000 companies in Germany and around 50,000 companies in the European Union. And in 2024, it starts with the large listed companies with more than 500 employees that are also subject to the previous version of the CSRD. So that's the NFRD, so that's a non-financial reporting directive. So all those large listed firms have to report according to the ESRS. And then starting from 2025, also other large companies will follow. So that means you have to start on your information regarding sustainability starting from 2025. And starting from 2026, also the listed small and medium-sized enterprises are also obliged to report. But for those SMEs, there will be some reduction in the requirements so that to reduce the compliance burden for those set of firms. The scope of the ESRS, or more general CSRD, they address a broader group of stakeholders, so not just to investors, which is more relevant for the financial reporting. So that's why it's naturally to think that a company would like to report such information voluntarily if they see some benefits from those relevant stakeholders. And the previous data and also previous analysis of the GBP has shown that a firm that is already invested in ESG-related measures, they would have higher customer satisfaction, and they appear more attractive as an employer, and also they face less pressure from the supplier, for example, which also shows that a willingness to kind of prepare such information to the outsiders will also somehow help the company to build up their reputation. And also what we could also see from our data is that a company could also voluntarily report their ESG information just out of intrinsic motives. And our data says that among the voluntary adopters of the ESRS, almost 70% of the companies, they consider this is just a good approach. It's just good for the society to report those kind of information and let the people or let the outsider know more about the sustainability activities of those firms. But at the same time, we also have to acknowledge the fact that a company would only be willing to report such information if the benefits would outweigh the costs. So what are the potential costs? So the relevant potential costs that we find out in our analysis that a lot of companies says that due to this ESRS and CSRD reporting requirements, there will be some human and also financial resources attached to that during the reporting process. And also the uncertainty regarding the requirement is also a big issue for the companies because a lot of things are not settled yet. So companies feel unsure to report such information. And due to all those factors in aggregate, for a company, it has to really think about the cost and also the benefits of voluntary reporting and to make a strategic decision based on those considerations.